Tesla ended the day up 5%. I ended the day up over $118,000, predominantly all of this coming from Tesla, about $68,000 of it. And in this video, we're going to talk about why I closed out my March calls that we opened last week. And we're going to go over why I opened an even better position, and more so why I think it's better and why I rolled out my option. Now, Tesla ended the day, like we said, up 5%. The weekly chart looks exactly what we want to see. We're getting expanding market bias, which is this indicator tape that you see here. When price is trading above this and it's in the light gray, this is a sign that the trend has shifted. You guys know, if you've been watching the channel all summer, that we are waiting for price to pull back and test this market bias, in which it has. You can also see that over the past 3 consecutive weeks, the BX trender, which is this indicator at the bottom of your screen, is showing higher highs. When we see higher highs like this on the BX trender consecutively, this is a sign of what's known as bullish accumulation. The reason we want bullish accumulation is that it doesn't matter what we think is going to happen with a stock. I can sit here all year, like most long-term investors who were buying over the past couple of years as Tesla's just going down, I could sit there and say, this company's undervalued, I'm going to buy. The truth, though, and this is why I'm not a long-term investor in most cases, is that the only thing that's going to move the stock is Wall Street, other market participants who agree with you. So if the narrative and the market and the people who can actually move it do not agree with you, then no offense, it doesn't matter what the hell you think, and it doesn't matter what I think. We need to be trading with the participants in the market who can actually move it. If we look at the monthly chart for Tesla, you're going to see that price has been compressing for many years now. And as a car company, yes, if you look at Tesla, not looking good. But what you have to understand is that this is an AI and a robotics company. We've been talking about this for the past 12 plus months, but it's only over the past 5 months that we've actually been taking long positions on Tesla. Let's go back and just take a look at our positions on Tesla for the year so far. We can isolate all of our trading data and positions taken this year just by looking at Tesla. You're going to notice that we were barely trading this all year, a couple of trades here and there. It wasn't until basically 5/30, which is June, that our interest in playing Tesla to the upside actually came to fruition. And since then, basically since May, we're up $630,000 on Tesla. So if we look at what was happening in May on Tesla, we are finding this bottom and we are getting bullish accumulation. This is why we are looking to play the stock within this level. I don't care about all of this shit. I know it sounds terrible, but it's like, even if I'm invested long term, I don't care if buyers are not stepping in. I don't want to waste my money and tie it up by sitting there. That's why I tell you guys, even if you're long-term investors, learn technical analysis. Just use a monthly chart, use a weekly chart. Just understand that the stock will not move unless there's money. So unless you're getting, literally as simple as it is, look at this chart. Unless you're getting higher lows into higher highs on the BX trender, then the stock isn't going to move. This entirety of lower highs into lower lows, the stock is not going to go up. So there's no reason to be participating in that type of market. But now looking at this monthly chart, you're going to notice that we have 4 consecutive months in a row of bullish accumulation. That is sign number 1 that price is actually to break out, right? It doesn't mean that it's going to, but it's a very good sign that price is going to break out. The second thing is that we are in the apex of the compression. So when we have a compression like this, right, the market is only ever going to move in one of 3 ways. The market is either going to do what's called an expansion. This is when price is in a massive sustained rally to the upside. Looking at what happened last time for Tesla, over the past 3 years, we had a 1,000% move within 672 days. So within 2 years, 1,000% surge. That's what's called an expansion. On top of that, we have what's called capitulation. This is when a stock is in a massive and aggressive sell-off. This is where we had price sell off in 489 days, 71%. Then the final mode that we have is what's called compression. And this is when price basically sits still between a resistance and a support for a sustained amount of time. Price will only ever move in those 3 modes: massive expansion, compression, and then capitulation. It could move in an uptrending market, where an uptrending market is expansion, consolidation, or compression, followed by expansion. A downtrending market is capitulation, compression, capitulation. That's all you have to know, honestly, as far as market structure and looking at trend. So if we look at this, we know that Tesla is compressing heavily on this big time frame. On top of that, we know that there's bullish accumulation that's been happening, which is a very, very good sign. And then third, we have earnings coming up, and we have the robotaxi event coming up. So when we look at this, there are a lot of fundamental aspects at play. Not only is Tesla undervalued as a company, but I don't even think 90% of Wall Street and retail, even at this point, understand that this is not a car company. It's not even a tech company. It's an AI and robotics company. And honestly, in my opinion, one of the most undervalued that we're going to have in the next couple of years. And this is why we've been talking about our long-term targets by end of 2025, somewhere around $280 to $300. I think that minimally by the end of this year, $300 will be taken out. I would love to sit here and say it's going to be $400 or $500, but realistically, I'm expecting just to move up to $300. Worst case scenario. If you want to learn more about all of the indicators that you see in this video, as well as the proprietary settings and the step-by-step trading system that I've built, you can take all of our courses completely free with the link in the description. If we see price push through that level, my targets going into the middle and end of 2025 is going to be 400 to 425, with my 2026, so basically end of 2025 target, up at $474. And I think that this is very realistic and most likely going to occur as long as they can execute over the next 12 to 24 months. Which this now brings me to why I closed out my position, because a lot of people were asking on these March calls, why would I walk away from this trade? If I think that Tesla is going to continue to run up into these levels, why would I walk away from it? And the main reason is that when you're trading options, and especially with somebody like myself, when I'm trading size with options, this is why I really pay attention to unusual options flow so much, because for somebody to open an options position that's $200,000, $300,000, $400,000, let alone millions and millions of dollars, you're going to get crushed on commissions, you're going to get crushed on slippage, and you're going to be the one to create liquidity. And that's why it's so unusual when we see these alpha gold flows that we talk about, because that person, if it's like a $5 million trade, they might lose 5 to 10% of that position just getting in, getting out, and paying commissions. When I went from trading most of my money in options, I was paying about $3,000 to $4,000 per day in commissions. When I moved to just shares, I'm paying $100 per day. So I'm telling you, in most cases, it's very, very rare to see a big options buyer create the volume. So as we're moving up, in these price targets, like if Tesla starts moving around $280, I don't want to be holding a $250 call, because while it will be safer because it's going to be deeper in the money, it's going to have intrinsic value, all the things we talk about in our free options simplified course, which the link is in the description. One thing that will be the downside to that is that there will not be as much volume. There's not going to be a lot of participants when this is $40, $50 in the money who want to buy something that deep in the money. So instead, as Tesla's price is climbing, I'm going to continue to take profits and roll it out to a further strike price, because I want to always look to trade with a strike price that's at the money best case scenario, meaning if Tesla's trading at 270, I want to have something that's at 275, 270, or furthest $280. Because when you're trading strikes that are around the money, there's much more volume, which means it's much easier to dump those contracts onto somebody else. And so what you're going to see, just like this rally from June out until July, we are taking profits and then rolling positions out with higher strike prices. This now leads us into the position that I opened today. And you're going to see that this at the top left side of your screen is going to be June 2025. So I went from March to June, further out in time, and I went with a strike price that is out of the money now. So as Tesla is trading right around 250, I decided to go with a $260 call. Once again, the reason we went with a $260 strike is that it's a little bit out of the money, not too far, but as Tesla's moving up to that 260 price target, when I want to take profit on this, it's going to be a more desired and popular option. So that's why we went with that strike. Now, the adjusted cost that we ended up paying here, you're going to see is $314,000. So this is a big trade, but as you saw, all of the money that I made on Tesla just this year is about $600,000. So I'm only risking 50% of the money that I've made on just Tesla this year. So even if everything went wrong, even if this position somehow went to zero and my thesis on Tesla is wrong, I'm only giving away half of the profits that I made off of just one ticker this year. And I don't say that like as an ego thing. I started with nothing, right? Like I've been trading for 9 years. This is not like it just happened overnight. But I say this to stress to you guys the fact that I'm not betting my mortgage and my net worth and everything that I have on this. No, right? This is a calculated play. And I've been keeping my risk like this the entire time. When we were only up $200,000, my position sizing for Tesla was $100,000. I've been making sure that even if my thesis for the next 12 to 24 months doesn't work out, I'm walking away with a profit. So even if this doesn't play, I'm still going to make 300 grand on Tesla this year, no matter what. I'll be able to pay my Cybertruck off and do some other fun things. But at the end of the day, we're making sure that we are taking care of our downside before anything. Now, all of this was filled through just one simple order. I set this at 10:40 a.m. Price was $44.95. And as we said before, I think that Tesla's going to continue to run 270, 280, 290. And once Tesla hits that 260 to 270 range, that's where I will close this position, realize the profit, and then open maybe a June 300 call or maybe a September 300 call. Let me know what you guys think down in the description. As always, guys, thanks for all the support, and I'll see you guys tomorrow.